If you just price it too low, it's not that tomorrow customers would come and buy it, because this is a planned purchase also.
Okay, I understand. My second question is, what is your expectation for the present demand?
Sorry to interrupt you, sir. Your voice is very less. Can you come near to the mic and speak, please?
Yeah, sure. Am I audible now?
Yes, sir.
Yeah. My question is, what is your expectation for the present demand scenario, and what is your strategy for further growth?
Yeah, so as we've been saying, the industry is growing at about 3%. And our, as we've been saying all through last many years, more than a decade, we have been growing 2 to 3x the industry. So our expectation is always to look at growing ahead of the industry. And as we look at India today with the strong GDP growth, significant manufacturing impetus, vehicle penetration levels, both automotive industry, manufacturing industry, infrastructure impetus, definitely robust domestic demand will continue for lubricants. There's a growing middle class, and we will continue to see the market growing in spite of EV coming. And Gulf would like to grow 2 to 3 times the market growth rate. So our expectation and our performance has been in line with that.
Okay, thank you, sir. One last question I would like to ask: is there any chance in raw material prices that may affect your operation or profit margin?
So our key inputs are linked to crude oil in a certain way with a time lag of 1 to 2 months. So depending on the movement of the crude, the input cost can slightly vary, and we have to then keep looking at the margin management as a very focus area, and that's what we have been doing.
So that would be partially impact your operating profit margin if the crude oil prices go high, right?
Yeah, that's a significant input in the entire raw material cost for us. So it's not a direct crude we use. We use the derivative base oil, and which is linked to crude.
Okay, I understand. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. The next question is from the line of Hardik Solanki from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. So congratulations on good set of numbers. So basically, accounting question. So what will be your full year lubricant revenue and additive revenue? And have you made a significant gross margin on battery segment?
So our battery segment currently is EBITDA neutral.
Okay.
That was the question. We couldn't hear you properly for the first question.
Yeah. So what is the full year revenue from the lubricant and additive? If you can just give a breakup of it.
No, we only share the volume breakup, which we have already done. We do not share the revenue breakup. We have already mentioned that the full year battery revenue was around 80 crores.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Yash Dantewadia from Dante Equities. Please go ahead.
Hi. Congratulations on the great set of numbers. Do you have any volume growth guidance for the next financial year?
Yeah, I think, Yash, as we've been mentioning, market growth expectation is about 3%. It could be slightly higher. So we've always been focusing on 2 to 3x the volume of the industry growth. And of course, the value growth, we have products which would cater to the higher value segment also. So look at a slightly higher value growth. So I think this has been our definite outlook in terms of continued kind of performance also. And we definitely look at that kind of band in terms of our growth.
What is our margin on the automotive segment? If you could share that number.
No, so you are talking of gross margins at the automotive segment versus industrial segment?
Yeah. Gross margin.
Overall automotive segment margins are higher versus industrial, but there are categories within automotive. So there is a diesel engine oil, there is a passenger car oil, there is a motorcycle. Each one has a different margin trajectory, gross margin trajectory also, and different
Approximately, if you could net the whole automotive segment, what would the gross margins be?
No, it will be very difficult to share because then there are a lot of, ATL, BTL activities which are needed to push the automotive products, whereas B2B or industrial products are more direct. So there are selling costs associated with that also. So difficult to, quantify, but overall as a trajectory, automotive products has a slightly higher margin at gross level than the industrial.
Also, if you could just briefly tell me what raw material pricing affects your operating margins the most, if there is anything that I can track and for judging the gross margins of the company overall, what raw material affects the margins the most?
So as I mentioned in the previous question that base oil, which is our key raw material, is linked to crude. And there are global base oil indices which can be tracked by, all of you, and which are publicly available data sometimes. So base oil is the key raw material which is linked to crude with a time lag of 1 to 2 months.
Perfect. I'll come back in the queue. Thank you so much for taking my question.
Thank you. The next question is from the line of Chirag Filoke from Ratnatraya Capital. Please go ahead.
Hi, thank you for the opportunity and congratulations on a strong set of numbers. Sorry, on the opening remarks, I missed the number. The core volume is 37 K?
Yes, 37,000 K.
Right. Understood. And for the year, is it correct that probably on an estimated basis, the A&P spend would be around 125 crores? Is that right?
So it is roughly 3.5% of the revenue.
Understood. Got it. If I may squeeze in, and this might be sort of a repetitive sort of a question, but on the volume side, the reported number is more closer to like a 3%-ish volume growth. And I understand there is an impact of factory fill. Could you maybe talk about this a little bit more from the factory fill perspective? Is it the two-wheeler side that is feeling the stress or the four-wheeler? Because some parts of the market are putting out good production numbers, which should correlate well to our factory fill. Because 3% on an overall basis is on the lower side. Is that true? Is that what would be a good estimate from your end also? Just a little bit more color on the volume growth. That's all. Thank you.
Yeah. So that's a very good question. I think we also mentioned that roughly total 10% of our volume is coming from factory fill, and it is largely from commercial vehicle segment. We do not have any major factory fill in the motorcycle or car segment, which is obviously doing very well. And we have seen that the growth in motorcycle, two-wheeler is nearly 13% for the year in terms of vehicle, and car is also almost near the double digit. But commercial vehicle in the last 2 quarters have been slightly lower in terms of production, commercial vehicle OEMs, and that's where we started getting some hit in terms of our overall volume growth. But excluding that, as we mentioned that for Q4 our volume growth is nearly 7% in the core lubricant, which is clearly towards the market. Because OEM production we do not have any control. So if they produce less, we have to sell less.
Correct. That makes sense. And in the base March 23 quarter, was factory fill also around 10%? So was it around 3.5?
Yeah, it hovers around that.
Understood. Thank you. Thank you for the opportunity.
Thank you.
Congratulations on a great set of numbers.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask question. The next question is from the line of Varun Arora from B&K Securities. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. I'm audible, right?
Yes.
Oh, thank you, sir. So I just want some 2 clarifications. First on PV market share. So we are holding 5% market share. Is that correct?
Around. It's slightly less.
Slightly less.
4 to 5%.
Okay. And the next question is on the, so you're saying that after 15 months later, you have taken the price hike. So how much was that? I mean, in the percentage terms?
So we mentioned that it is depending on category to category. So depending on the competitive actions and overall market scenario and our input cost, where it has gone up in which product category more, we try to then take the price increases. So overall in the range of around 2%, but varying between categories.
Okay. Okay, fine, sir. So just now on data center. So anything the companies in the Gulf Oil Lubricants, the European actually doing something on that technology on the data centers. So anything we are doing on developing any product on the data center. So since after maybe 2 to 3 years or maybe 4 to 5 years, this will be the humongous opportunity for the company. So any
the data center is definitely a buzzword we are seeing all around. So we are looking at that segment, but it is an evolving segment. So definitely that is an area which we want to look at.
Okay, sir. Sir, thank you, sir. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Arya Patel from MK Global. Please go ahead.
Hi, am I audible?
Yes, sir, you're audible.
First of all, congratulations on great set of numbers. Sir, I just had a question regarding what is the capex standard for the FY24, and are we planning any further capex in EV or going ahead?
So our usual capex in the lubricant, core lubricant business is roughly 20-25 crores, which we have been guiding about. And last year also we have spent nearly similar amount. And we'll continue to do that in the current year as well. This is towards augmenting some of the filling capacity and storage capacity around, the lubricant parts. And in terms of EVs, we keep evaluating at the space. It's a very nascent space and evolving space. So we keep exploring opportunities in the EV side where, based on our strength of brand and distribution, how we can play a bigger role. Because while we know that the lubricants and the ICE market, ICE vehicles are going to continue to grow, but there will be a certain percentage in certain categories which will be, converting to EV at least to some percentage. And that's why we closely keep watch at the EV space, and we'll keep exploring the opportunities there. But no yet any, whatever we have done already is towards the charger manufacturing, AC charger, slow AC charger, fast DC charger, software company. We have already done 3 investments, but we keep looking at this space.
Thank you. And one more question. Sir, can you guide us on the base oil trends currently?
So base oil follows crude, as we have mentioned in earlier questions, that it went up to above $90 recently, and then now has come back to around $83-84, which is a good sign. So it will be, as long as the crude is in the range of below $90 or around $90-92 also, we see stability, and unless the geopolitical situation turns really ugly, we believe that the crude will be in this range, and that should augur well for the stability of the margins.
Got it, sir. Thank you so much.
Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Misha, who is an individual investor. Please go ahead.
Hello, am I audible?
Yes, ma'am, you're audible.
Thank you. Thank you for giving me the opportunity. I just have 2 questions. So there is a steep increase in the other expenses on a full year basis by approximately 18.5 to 19%. Could you help with some reasons around that, sir?
So a large part of it is coming from obviously the A&P, which has been higher, which is the advertisement and promotions. And also, since our volumes, including AdBlue, has gone up, it is freight has also gone up. So these 2 contribute a large part of it.
Okay. And sir, you mentioned in your press release that your export has picked up really well in this particular quarter. So what is the total percentage of export on your core volume, if we may get that?
We usually have around 5 to 6% in terms of export in our thing. This quarter was slightly higher because some of the OEMs for which we export has been good. But overall, it is in the range of around 5-6% of our core lubricants.
Understood. And the last one, sir, on the balance sheet piece, we see if we exclude the cash and cash equivalents balance, there is a slight deterioration in the net working capital that we have. So could you throw some light on how has been the working capital performance over this year?
So working capital has been quite stable. Overall, we continue to track in the range of around 105 days of gross working capital, 105 to 110 days, which has been our sort of band in the past trend.
Okay, sir. Okay, that's it from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask questions. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
I think you go. Yeah, thank you so much. Just to close off on the outlook, of course, let me thank everybody for being on the call. As we see, the demand conditions are quite strong, given the economic GDP growth, the kind of thrust in terms of the manufacturing sector, infrastructure will pick up now post-elections. I think we are seeing strong growth potential for the industry. We have also already detailed in this call that segments which are doing well for us and potential for us to grow in segments we are having lower market share. The brand we have is quite strong, so both increasing distribution and increasing our customer base is the endeavor. We have always said 2 to 3x the market growth, which for us is a strategic focus. We are committed to outperform the industry growth rate. We also want to look at value growth, which is above that. Effective margin management, profitability, and maximizing returns to shareholders has always been our mantra. And in the outlook, of course, as Manish has also mentioned, we are looking at EV space, not only to grow our charger business, but to look at maybe some other investments. We are going to focus on growing ahead of the market in the strong product segments like diesel engine oil, motorcycle, and even higher aggressive growth in segments where we have less than 5%, to mention few like industrial and passenger cars. Series of new products have been launched, and now definitely we are seeing these being accepted by consumers. Our brand investments continue. As we mentioned, we have invested. We have a lot of brand investments into sports, into brand ambassadors like Mahendra Singh Dhoni, Hardik Pandya, Smriti Mandhana. Globally, we are doing Williams Racing with Formula 1 and, of course, Chennai Super Kings. Our activities, both above the line, below the line, have given us great results. So I think this is the outlook that we continue. And having had the quarter which has done really well, really happy to share that with all of you and hope we get your support going forward. Thank you so much.
On behalf of Emkay Global Financial Service, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.